What if I told you that the single greatest wealth creation event of our lifetime is happening right now, and most investors are looking in all the wrong places? The artificial intelligence revolution isn't just a distant dream, it's a tangible, world-altering force reshaping every industry. We're at the precipice of a shift that will mint a new generation of millionaires. The critical question today: will you be one of them, or will you be left watching from the sidelines wondering what could have been? This isn't about chasing the same handful of overhyped AI stocks. Sustainable wealth isn't built by following the crowd, it's forged by identifying the quiet giants, the foundational companies building the essential infrastructure and platforms for AI. Today we'll pull back the curtain on two extraordinary companies. One, a nimble, powerful cloud computing provider, beloved by developers and startups. It's the digital pickaxe and shovel of the AI gold rush. The other, a household name global tech conglomerate you interact with daily. Beneath the familiar surface, it's undergoing a monumental transformation. Marshalling its immense resources, massive user base, and world-class research to dominate consumer-facing AI and the immersive metaverse. These aren't speculative gambles. They are established, profitable companies with clear moats and visionary leadership. They represent value, growth, and strategic positioning in the defining technological movement of our time. Our analysis is the result of deep research and belief in their long-term prospects. Stay with me for the full breakdown. The insights could change your portfolio and financial future. The opportunity is here, it is real, and it is waiting for those bold enough to seize it. The journey to financial independence is paved with moments of clarity and decisive action. What you've just heard is your invitation to one of those moments. We believe the information we're about to share on these two dynamic AI stocks is too important to be skimmed or saved for later. Hit the like button, let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's unveil the first AI stock that we believe is poised for incredible things. Let's pull back the curtain on our first pick, a company that embodies innovation and accessibility in the cloud space. We're talking about DigitalOcean, ticker DOCN. While giants like Amazon Web Services, Microsoft Azure, and Google Cloud dominate headlines, DigitalOcean has carved out a valuable, rapidly growing niche. Their mission is simple: provide simple, affordable, high-performing cloud infrastructure. This isn't marketing fluff, it's their business model. Targeting developers, startups, and small to medium-sized businesses, they are the ultimate enabler for builders of the digital world. What exactly does DigitalOcean do? They provide the fundamental building blocks of the internet: cloud infrastructure, virtual servers called droplets, storage, databases, networking services. Developers need to build, deploy, and scale their applications. DigitalOcean makes this incredibly fast. Spin up a server in just 55 seconds. Headquartered in New York City with 15 data centers around the globe, ensuring fast, responsive apps for users anywhere. Their genius lies in relentless focus on simplicity. While hyperscale providers can feel complex and expensive, DigitalOcean offers intuitive, developer-friendly solutions with transparent, predictable pricing. This minimalist approach has cultivated a fiercely loyal community and powerful brand reputation built on trust and performance. They offer world-class documentation, community support, tutorials, and guides. DigitalOcean runs Hacktoberfest, an annual event partnering with companies like GitHub and Intel, celebrating open-source contributions. They're not just selling a service, they're a pillar of the developer community. So why is a developer-focused cloud provider like DigitalOcean a top AI stock for 2025? The answer is simple. Artificial intelligence is built on code, and that code needs a place to run. As AI models and applications become more sophisticated, the demand for powerful, scalable, affordable computing infrastructure is skyrocketing. DigitalOcean is perfectly positioned to capture this market. They offer virtual GPUs, specialized processors essential for training and running complex AI models. They're launching AI agentic cloud products, designed to make it incredibly easy for developers to build and deploy AI-powered applications without needing a PhD in machine learning. From an investment perspective, DigitalOcean is undervalued. The market focuses on mega-cap AI players and overlooks picks and shovels like DOCN. The company is profitable, has a strong balance sheet, and is growing its customer base at a healthy clip. As AI startups move to production, they'll need a reliable, scalable, cost-effective cloud partner. Every new AI application, every chatbot, every recommendation engine, every data analysis tool on DigitalOcean represents recurring revenue. As customers grow, infrastructure needs grow, expanding revenue naturally. DigitalOcean currently holds a market cap of $2.73 billion, with earnings per share of $1.39 and a price-to-earnings ratio of 21.58. In 2024, the company generated $780.62 million in revenue and a net income of $84.49 million. At a share price of $29.99, the stock is trading about 11% below its fair value estimate of $33.38. The company has been reporting strong momentum. In the second quarter of 2025, DigitalOcean posted a 14% year-over-year revenue increase, marking its strongest incremental annual recurring revenue growth since late 2022. That strength prompted the company to raise its full-year guidance, boosting investor confidence. Adding to this, DigitalOcean successfully closed a $625 million convertible senior notes offering, which is expected to bring in net proceeds of about $605.6 million. This move strengthens the company's balance sheet and provides additional financial flexibility. Innovation remains a big part of its strategy, with the launch of Cloudways Copilot and the DigitalOcean Gradient AI platform. These products position the company competitively in cloud computing and artificial intelligence, areas with significant growth potential. Following these positive developments, the stock has risen nearly 30% since its latest earnings release, and analysts have raised their price targets in anticipation of further gains. However, despite these positives, DigitalOcean still faces steep competition from giants like Amazon Web Services and Microsoft Azure, raising questions about its ability to scale long-term. Analysts remain cautiously optimistic, pointing to both the opportunities and the challenges ahead. Investing in DigitalOcean now is buying a stake in thousands of future AI innovators. It's a diversified bet on an ecosystem anchored by a customer-loved, strategically positioned company. Now let's shift our focus to our second pick, a company that needs no introduction but whose AI story is profoundly misunderstood by the market. We're talking about Meta Platforms, ticker Meta. For years, investors saw Meta through its family of apps, Facebook, Instagram, WhatsApp, Messenger. These platforms remain powerful, profitable cash machines, but focusing only on them is like driving while looking in the rearview mirror. The real story pointing to explosive growth is Meta's aggressive pivot to artificial intelligence. Meta's mission is to give people power to build community and bring the world closer together. In the 21st century, the most powerful tool for that mission is artificial intelligence. Meta's leadership understands this. They aren't bolting AI on as an afterthought, they're re-architecting the whole company around it. AI is the central nervous system of Meta's ecosystem. Meta's scale gives it an almost insurmountable advantage in the AI race. It has one of the largest proprietary datasets on human interaction ever collected. Every like, share, comment, and connection creates a flywheel. Better AI leads to more engagement, which generates more data to further improve the AI. That's a competitive moat few rivals can match. Meta's financial firepower is staggering. They're investing billions every year in AI research and massive computational infrastructure, designing custom silicon chips and building colossal AI-optimized data centers. The company is leveraging its world-class research to build and open-source powerful large language models, like Llama. By making these foundational models available to developers everywhere, Meta is positioning itself as a central pillar of the open AI ecosystem, creating immense goodwill and influence while challenging closed, proprietary models. This open-source approach has direct commercial benefits. As developers adopt Llama models, they'll seek the best platforms to run them. Meta is perfectly positioned to offer optimized cloud services. Integration of generative AI into advertising tools is revolutionizing campaign creation. Imagine an AI generating dozens of ad variations, images, text, formats, all optimized for specific audiences. The company commands a massive market cap of $1.86 trillion, with earnings per share of $28.29 and a price-to-earnings ratio of 26.13. In 2024, Meta reported $164.5 billion in revenue and $62.36 billion in net income, alongside a dividend yield of 0.28%. The most recent quarter showed a strong 21.6% year-over-year revenue increase, totaling $47.52 billion. Growth was fueled by a surge in ad impressions across all regions and a 38% jump in earnings per share, showcasing both efficiency and margin expansion. The company's ongoing investments in artificial intelligence continue to be a key driver of its strategy, with projects such as the Hypernova smart glasses aiming to create new revenue streams. Despite this impressive performance, Meta has encountered challenges. Reports of a hiring freeze in its AI division, following a period of aggressive recruitment, have raised concerns about rising costs. This decision, coupled with caution around future product launches and regulatory headwinds, has contributed to recent stock pullbacks. Overall, Meta remains one of the strongest players in the tech sector with a market cap approaching $2 trillion. But while the company's fundamentals are solid and its AI strategy is promising, investors remain watchful, balancing enthusiasm for growth against the risks of cost pressures and regulatory challenges. Despite a strong recovery in stock price, the market still isn't fully pricing in the long-term value of its AI and metaverse initiatives. Many analysts focus on quarterly fluctuations, missing the tectonic shift. You're getting the world's leading social media company, a dominant force in digital advertising, and a future AI and metaverse powerhouse, all for a price that doesn't fully reflect that trifecta. The profit potential is multifaceted. First, AI-driven engagement will fuel core advertising. Second, AI-powered business tools open new revenue streams. Third, the metaverse is a multi-trillion-dollar option on future digital interaction. Meta is a cash flow machine investing profits into the next frontier. The skepticism keeping its valuation in check is the very opportunity for forward-looking investors today. We've explored two powerful companies, DigitalOcean and Meta Platforms, each with a unique and compelling path to AI-driven growth. But identifying great companies is only half the battle. The other half is having the conviction and analytical framework to invest with confidence. This is where the Value Stocks Investing Master Course becomes invaluable. Think of it as your personal mentor, guiding you through methodologies used by the world's most successful investors. You won't just learn what a P/E ratio is, you'll learn how to interpret it contextually. You'll identify specific sources of competitive advantage, network effects, switching costs, intangible assets. The course is packed with real-world examples walking you through actual company analysis. You'll get exclusive tools and checklists to start evaluating stocks immediately. The goal is transforming you from a passive market participant into an active, intelligent business owner. Investing in your education is the highest return investment you can make. Knowledge combined with community is unstoppable. That's why we've created an exclusive investing community on Patreon, your invitation to join our inner circle. A private group of passionate, forward-thinking investors committed to helping each other succeed. You'll get watchlist updates, early access to research, and behind-the-scenes analysis. As a member, you get exclusive perks, watchlist pro updates, stocks we're researching, preliminary notes, early access to essays and reports. The private Discord server lets you interact directly with us and hundreds of other smart investors. Real-time discussions about market news, earnings reports, new investment ideas. We've covered tremendous ground today, from the macro AI opportunity to deep dives into DigitalOcean and Meta Platforms, strategically positioned for phenomenal returns. These aren't fleeting trends, they are foundational shifts. These companies are at the epicenter of change as the future unfolds before our eyes. The key takeaway, the most obvious AI plays aren't always the best ones. True opportunity lies beneath the surface, companies providing critical tools or established giants undergoing transformation. Both DigitalOcean and Meta offer current profitability, clear growth vectors, and reasonable valuations. The analysis is done, the case is made, the next move is yours. Here's a question to spark conversation. Which type of AI company holds more long-term potential? Foundational infrastructure providers like DigitalOcean that act as picks and shovels, or massive integrated platforms like Meta that control end-user experience? Share your reasoning in the comments below. Challenge our assumptions and let's build a rich discussion for the entire community. Thank you for investing your time with us today. We hope you found this analysis insightful, inspiring, and actionable. Please give this video a like, share it with someone who would find it valuable, and subscribe to our channel so you never miss our next deep dive. We'll see you in the next one.